Okay, let's talk about the political backdrop and who's good for stocks and who's not good for stocks. And while everyone else is losing their shit about whether Trump or Biden wins the presidency, let's instead raise our game a little bit and do a little work on making our understanding of the stock market a little more sophisticated. So let's start with a stereotypical view, which is Republicans are seen as good for the stock market and Democrats are seen as bad. But when you're talking about the president doesn't really matter unless there's also a legislature behind him. And so if the Republicans control both the House and Senate, as well as the executive branch, the presidency, that typically is very bullish for stocks. And conversely, when a Democrat is the president and the Democrats control the legislature, the House and Senate, that's stereotypically bearish for stocks. So this is sort of the step one to kind of get the backdrop. Now let's move into some nuance. So one of the best circumstances, in my opinion, for stocks is when one party controls the legislature and the other party controls the executive branch. So you have a mixed political backdrop and more likelihood of gridlock or of limit to any legislation except that which is truly, truly bipartisan. So that's actually really bullish for stocks because the private sector can look at that and they can assume, okay, we're not going to have any major wholesale changes, not any major tax law changes that we have to get smart about, not any kind of regulatory barrier changes. We're not going to have like major changes in tariffing that might disrupt one industry at the expense of another. So that is a type of certainty that's predicated on gridlock in Washington. And so that's sort of the ideal backdrop for the stock market. And you'll see many articles that talk about, the Democratic presidents are good for the stock market, but there's no attention paid to who controls the legislature. Ideally, you want to have mixed political power across these two houses, and it doesn't really matter who controls what, as long as it's two parties sharing the power. Okay, and then one more nuance, which is has to do with how the stock market can observe what happens to the political backdrop and react accordingly. And then likewise, the political backdrop, the people participating in our political system can see that and also adjust. What do I mean by that? I'll give an example that happened in Peru about 10 years ago. There was a far left presidential candidate that won election, and he was seen as very, very negative for business interests. And the day he was elected, the Peruvian stock market dropped 20% that day. And ironically, he changed his rhetoric when he saw that. That is such an embarrassment and so negative that he actually moderated his rhetoric and didn't turn out to be as anti-business a candidate as it was presumed that he would be. And so this iterative process that can happen where the political system looks at the stock market and vice versa, that can also cause, say, a democratically controlled House, Senate, and presidential in presidency, they can see that, okay, maybe we should react to the negativity that's seen in us by the private sector and settle down. And so this iterative aspect is another thing to keep in mind. And then one more nuance to add on top of that, which is when you have democratic control of the political backdrop in general, typically you have regulatory barriers go up. In general, this is a generalization, but increase in regulation actually adjusts and changes the barriers to entry in an industry. And typically industries, as they become more and more regulated, you have fewer and fewer players in the industry. It approaches sort of oligopolistic competition, maybe 4 or 5 participants and no new entrants. And all the participants start to settle down. No one is going to make major additions in capacity. No one's going to do anything radical with pricing. And so you have a type of stability that is imposed as a second order effect of actions by, say, a presidency or a legislative body that is seen as anti-business in the short run, but is actually very good for competitive dynamics in the long run. So is that bullish or bearish? I would argue that it's actually bullish, but you have to get through the initial bearish reaction to the increase in regulation, but be ready for a better competitive environment and a bigger barrier to entry in a given industry. So keep these nuances in mind, and don't lose your shit about who wins this election. You want to look longer term and be aware of these nuances. I hope that's helpful, and as always, thanks for watching.